Welcome back to Next Gen Investing. We'd like to welcome in our next guest. That's David Siemer, the Chief Executive Officer of Wave Digital Assets. KG with me as well, Kevin Green. David, as we talk Bitcoin, as that's the primary, I think, discussion point for many investors that are viewers of our network within this greater space of digital assets, as someone who built a business around this, I think implicitly you're probably bullish on the space, but are you even surprised with how impressive Bitcoin's been over the last few months?
Yeah, we're definitely a little surprised and very, very excited. When we saw the prices kind of decline in the beginning of the year, when a lot of asset prices were declining, it's heavily driven by institutional sellers, and we didn't see a lot of spot sellers or retail sellers then, but obviously institutional is pretty large in crypto even now. And what we've seen in this rally is actually almost entirely driven by retail and really U.S. retail. And I think that all goes back to kind of the policies we're seeing out of this administration that are being very pro crypto. People are really kind of comfortable finally that we're going to have real frameworks coming here. And actually, what I was just watching before jumping over to this call, there's an SEC roundtable going on right now where S. Atkins, head of the SEC, is laying out a framework for tokenization and allowing kind of more types of financial assets to move on chain. And it's a huge priority of this government and of the Trump administration. And obviously, his family is very invested through World Liberty and decentralized finance. But it's a pretty incredible moment for people in the crypto space, at least, to see the head of the SEC, laying out kind of the path for these assets, all of these layer ones and whatnot, to really be able to do something pretty powerful.
David, what are you looking forward to next within the crypto space? Obviously, we had the recovery, which has been doing really good. It looks like we're trying to break out to the upside when it comes to Bitcoin. I also have to call out Ethereum. Not a lot of people talk about it, but it's up 88% off the lows, give or take. And so what's next? Regulatory environment's definitely easing, but do you have anything on your radar that you're looking forward to over the next, let's say, 6 months, 12 months from now?
Yeah, I mean, the adoption curve of crypto is still kind of behind where asset prices are, and it really goes back to regulations. I mean, the biggest impediment to digital assets over the last several years has been not just the U.S. government, but many global governments being very negative and punitive towards the asset class. The U.S. changing is also changing the rest of the world. We're seeing, obviously, every Europe, Asia, Middle East, they were always much more positive than the U.S., but they're trying to compete now. They're trying to be ridiculously positive and come out with even more aggressive stances than the U.S. government to attract investment, to attract job creation and so forth. So the run on ETH has been pretty amazing. Obviously, I've held ETH since the ICO, so I'm not really trusting this ETH run right now. ETH still has kind of the death by 1,000 cuts challenge, meaning it's great in general as a generalist, but it's not particularly great at any one thing. Where Solana is cheaper or Ripple is more around different aspects and whatnot. So I probably would sell the ETH rally a little, but it's been an incredible run, and we're seeing nice runs across all alts.
When you look at this space broadly, I think one could argue you're not seeing that necessarily today. Well, I guess you kind of are, given that Bitcoin's down. It's acted differently than it has in the past. What I mean is it's been kind of a short volatility or, kind of high beta risk asset at times past. This time around, or at least in the last few months, it's truly, I think, lived up to this idea that it can be an alternative sort of financial asset, and one that can, perhaps act a little bit more like a safety asset in times of dramatic uncertainty in the traditional financial system. Do you think this last few months has done a lot to give credence to that theory, or is it still a risk asset for the time being?
That's the most positive thing is just what you said, the kind of breaking down of correlation between the NASDAQ and Bitcoin has been really impactful. And whether or not Bitcoin, by every theoretical measure, should be a risk-off asset. I mean, it should be, it should be counter-cyclical to these movements. Tariffs should have caused it to go up. This is definitely the first time in the 15 years I've held Bitcoin that seems to be true. So we're seeing the beginnings of that, and perception is definitely reality on these kind of aspects. So if that perception can be maintained and it continue to be a bit countercyclical, then I think it will establish that.
It seems like through the market volatility that we've seen over the last, let's say, month or so, stable coins have really kind of gained a lot of the attention for the market just as a whole. And it seems like the Senate has been unable to really kind of pass a bill out. What makes stable coins so attractive, and why does it gain so much attention and notoriety when we have market volatility, or we have events like the dollar moving to the downside or yields moving higher? What is the reason for maybe some of that attention being brought to stablecoins as of late?
Yeah, stablecoins are ridiculously important for both crypto and the U.S. dollar. So I was actually one of the first investors in Tether way back in 2013. I mean, stablecoins are the killer app of crypto. The whole world wants dollars. If you're talking about something like 35% of Tether sits in Africa right now. They just don't have great currencies. They need better currencies. We're seeing it become basically the currency of remittance around the world. And again, there probably will be $10 trillion of stablecoins in the not too distant future. It's just a wonderful use case. It's dollars without kind of restrictions, and it's, I said it. Most people think that this is really the first killer app of crypto. So the legislation that Haggerty and Klein and Stein and Hill are proposing, separately the Genius and Stable bill, I think they're actually really close. I mean, I know the deadline was always, I think, June. I think they will hit that deadline. There's a lot to be worked out still. Obviously, there's all sorts of AML, KYC concerns around allowing movement of dollars this freely at the scales that stablecoins can move. There's $200 billion of stablecoins, but I'm very optimistic that the legislation will make it by June, and it will be good, maybe not perfect from a crypto lens at least, but it would be very good. And so we're very, very optimistic. Obviously, stablecoins themselves are not speculative instruments, but they are kind of the oil in crypto to make everything work.
Yeah, David, I think you're making a case for those who live outside the borders of the U.S., maybe really understand more so than those that live inside this idea that dollars aren't as plentiful elsewhere and that they need something that's a little bit more stable than their local currencies. My question to you, though, David, is someone who's built a business in this space, what are you personally excited for? What do you see happening in this world in terms of how this technology is going to be used, maybe beyond just the assets themselves? Do you see tokenization and other things of the traditional financial system down the line, or where do you see this all going?
Yeah, I mean, combination of stablecoins, tokenization is what I'm most excited about right now. So we have a existing stock market that's closed more than half the time. So we're beginning to see in the term in crypto is called RWAs, real world assets. Real world asset could be like tokenized S&P 500 shares, where again, this is a very U.S.-centric, TV show, and we all live in the U.S., so it's kind of easy to forget how the rest of the world lives. I mean, if you live in Asia, in India, wherever, and you want to trade the S&P 500, it's closed, pretty much all your waking hours, which is a problem. So putting a lot of these things on chain, which is inherently 24/7, is a huge step. Again, like having better access to financial assets in other parts of the world. Think Sahara Africa, Indonesia, a lot of the more developing world countries, the people there do not have bank accounts. They do not have stock brokerage accounts. It's almost impossible for them to get. Half of them don't even have like mailing addresses or government IDs. So, putting these assets on chain where anybody can access them is hugely impactful for those parts of the world.
Good stuff. David Siemer, Chief Executive Officer of Wave Digital Asset. Appreciate it as always, and good insights here on the space that is certainly growing.